Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Monday, the 22nd of January, Bull versus Bear webinar. Steve Miley here on the Call for Trade Day. Welcome, everyone. Going to go through our slightly different run through on Monday. We'll take a look at the shape of the week. So a little bit more of a focus on what's coming up through the week. Yes, we are day trading at trade day, but having an understanding of the shape of the week, I think it's good practice. Why? If we have a lot of data, a lot of expectations of fundamental changes that could impact financial markets coming, for example, later in the week, it's more likely then the beginning of the week is going to be quieter. Quieter equals less volatility equals narrower ranges. It may cause you to slightly adjust your expectations for your stop losses, your whole risk management, your profit targets, etc., due to expectations of higher or lower volatility. Okay, and and lower volatility tends to come when we have events. Okay, it's kind of quite basic trading 1.0. So that's why we take a look at the shape of the week. So I'm just going to look at this is the briefing, the US briefing you get from Live School, just below where you're watching the webinar now. You have the three columns. We have our technical analysis section, which I'll come to shortly, from Market Chartist. Market Chartist being me. You get the fundamental analysis that is written by our macroeconomic fundamental team in here, which is myself and some colleagues here at Trade Day. And then we also get the Live Squawk from our partners at Live Squawk, who produce the Squawk service that you can tune into every day. But they also provide these briefings that you get just below where you are in the third column. So not a huge amount to talk about on the US briefing. DeSantis has dropped out of the 2024 presidential race, endorses Trump. That doesn't really surprise, and that doesn't really impact what we're looking at. ECB signal no rush to cut interest rates. We saw that coming out from Lagarde last week. Fed's daily saying that policy in a good place, risks are balanced. Remember, we have entered the FOMC Fed blackout period. So no Fed speakers talking about monetary policy now for all of this week and the beginning of next week until the meeting, which is on the 30th and 31st, Tuesday, Wednesday. And then we get the decision on the Wednesday. So blackout period we're in now. So not expecting anything from the Fed speakers. Let's move forward to on the weekly recap. So again, in that macro session, you have the weekly recap and the trade day macro matters. So the macro matters is the more in-depth in here, and then we kind of summarize it in the weekly recap. So if you want to go in and take a look at a lot more depth of what happened last week and what the expectations are coming into this week, take a look at the macro matters to get, if you want to improve your macroeconomic fundamental understanding of what's going into markets going into this week. We'll go and take a look at the summary article, though, which is the weekly recap and outlook, which just covers basically just the bullet points of everything that's covered there in the macro matters. So US Q4 earnings reports continued, probably on the better side. They've not been outstanding. Morgan Stanley disappointed. Goldman Sachs beat. Schlumberger was in line. Travelers and State Street beat forecasts. The main driver of the significant pushes higher to multi-month in sometimes record highs for the US equity indices and also the strong push higher in global stocks generally in here, not China. China accepted there. China's still under negative pressures and under negative pressures today. But was the tech sector has led the way. The big driver here was TSMC, the world's largest chip maker, supplier to NVIDIA and Apple. Their earnings were only slightly better than expectations, but they gave a very positive 2024 outlook, and that saw the TSMC stock surge, the whole semiconductor and chip sector surge. It saw the wider tech sector surge. It saw Apple go higher, NVIDIA higher in here. Apple also got a positive, having had some downgrades to begin 2024. Last week we saw Bank of America upgraded Apple, and they're looking for a 23% higher price in 2024 for Apple in here. So that helped the whole of that big tech sector higher, alongside the TSMC earnings and forward guidance. All of that sent tech higher, the Nasdaq higher, the Nasdaq leading the broader indices higher and hitting some indices here, and the Nasdaq 100 hitting all-time highs now. So US retail sales also beat expectations earlier in the week, last week, but that was actually seen as a negative. We've been speaking about this: good data equals negative outcome for stock indices, because it indicates then a fading hope of a rate cut, and we've been talking about that at March. Fed's entered this blackout period, just mentioned that anyway in here. But look, March US interest rate cut hopes diminished as futures traders who were once confident of a 70% chance of a cut a month ago have now scaled back close to 50%. And we were talking about that all last week. And really, the move really came off that US retail sales data was on that day there. We also had some comments out of some of the Fed speakers in here who are more middle ground, not hawks, not doves. Fairly hawkish. They're pushing back on an earlier rate cut in here in March. And if we go and take a look at the CME Fed tool, which we've been monitoring, look at it for March now. This is up at now. This is for unchanged, over 50%. So there's more chance of the market now. The market's now seeing more chance of the Fed's rates staying unchanged in January and March than there being a cut now. But the good thing is, if you're an equity bull, I'm an equity bull for 2024, is that despite there being fading hopes of a rate cut in March, okay, the equity markets don't really mind. The markets have taken it in their stride. Okay, we may be getting a cut later, but we can take that in our stride, not a problem. And if we go to the end of the year in here, we're at 375 to 400. Okay, so previously, so that's from 525 to 550. What is that? We're still at 150 down, right? Yeah, we're still at 150 down. So the market is still looking for 6 rate cuts in here by the end of the year. Total of 150 down. That's pretty much where it's been since the December Fed meeting. Okay, so by end of the year, still looking for 6 rate cuts, although we're not looking for them to necessarily, or for 150 basis points anyway, but not necessarily starting in March. 1, 2, 3, 4, 5, 6. So I think we were looking previously, I was looking for a pull some point here in the middle, the end of the year. And now the market's maybe looking, we don't get the first rate cut in March, but then we get pretty much rate cuts from May onwards of, here, as you see in here, we're looking at a 50% chance, or there's only a 14% chance you don't get a rate cut by May, one rate cut by May, but then you're looking at one at every meeting, then a rate cut, 25 basis points until the end of the year. So we were looking for an earlier start. Now we're looking for the same end point, 150 basis points down. The market's still pricing in, but maybe starting later. Okay, let's go back to the weekly recap. So that's what kind of really happened last week. What happened with stocks? Well, multi-month highs or multi-year highs on US equity index futures, and European indices moving to multi-month highs, if not all-time highs. US and European yields are moving the other way. So yields went higher, bonds went down. Okay, so we saw a dislocation in here. If we go and look at remember previously, end of last year, very beginning of this year, there was this positive correlation. Look at the bond markets here, though. We've been going down since the beginning of the year, okay, as we've seen fading hopes of that early rate cut, okay, going down in here. You can see 10-year, 30-year, and the 2-year, which is more sensitive to interest rates, having pushed notably higher in here. 1 point this year, back down lower in here already in January. So a noticeable push higher. So it's higher prices, lower yields on the 2-year, and then back lower. So this is all reflecting the fading chance of an earlier rate cut. Okay. However, look at the dislocation we've seen now. If we go to the indices, stocks in here, boom, new highs on the S&P. Boom, 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 new highs on the Nasdaq. Okay, so we've seen that dislocation, that breakdown. The equity markets don't mind the fact that we may not be getting that rate cut as early. The bond market's reacting, but the equity markets not so fussed that we're not going to get that earlier rate cut. They're seeing the fact that we're going to avoid a recession as a big positive. They're seeing the fact that we are going to the earnings data coming through is staying positive, and there's positive outlook for that whole tech sector. Let's go back to the weekly recap and look what we've got coming. Just quick nod to the other markets though. US dollar index has gained as we've seen yields go higher. So previously it had been selling off as yields were lower. Now US dollar is doing well. on the back of a potential higher yields, relatively higher yields. In the US, gold futures down and then a bounce in here as the dollar strengthened. Remember that inverse relationship. And on the oil side, market's kind of in a sideways, a wider range theme now, dipped and rebound, and with tension still raised in the Middle East. What have we got coming up this week? So as we said, the Fed have entered their blackout period on the central bank side, but we do get interest rate decisions this week. We get the PBOC. We've had that actually on the overnight. Nothing major to report there, although there has been some protectionism going on of the Chinese yuan in here overnight this morning, as we're seeing the Chinese stock market crash lower again in here today. Bank of Japan we get tomorrow, Bank of Canada on Wednesday, and the ECB, European Central Bank, on Thursday. That's probably going to be of most interest from the ECB, given that we're not quite sure when the first rate cut is going to come. Very indecisive on that. No clear signs from the ECB, maybe pushing out to closer to the middle of the year, but we may get some more transparency on that on Thursday. On the data side, we have the standout data is the EU consumer confidence on Tuesday. Global flash PMI data, that's always important on Wednesday. There should be a U there. That should be US GDP and durable goods on Tuesday. And then, actually, that's just Thursday, US GDP and durable goods. That's a typo as well. That should be Thursday. And then probably the most important data of the day, the US PCE data, the month-to-month, year-on-year data coming on Friday. Remember, that's the Fed's preferred inflation measure. Okay, so we're certainly keeping an eye out for that. And then earnings continue to roll on. It's a big week for earnings in here. Nothing of note, as you can see in here today, and then nothing really of note in here today either on the macro calendar. But going into the week, I'm actually going to go through more. I've got the standouts in here: Johnson & Johnson, P&G, Netflix. But if we go through them all, Johnson & Johnson, P&G, Procter & Gamble, that is, Netflix, Verizon, Texas Instruments, and General Electric, all on Tuesday. Tesla, ASML, Abbott Labs, IBM, AT&T on Wednesday. Visa and Intel Thursday, and then Caterpillar and American Express. Remember, Caterpillar benchmark for the construction industry, both in the US and globally. Tesla and Netflix. The Netflix scene is a global reflection barometer of the US and global consumer. So Netflix always important as well, and some other big names in there. So it's a big week, Tuesday through Friday on the earnings side. We've already covered the indices in here and the bond markets. As you can see today, very, very quiet on the market side. Overnight tonight, we do get the Bank of Japan in here. We did get no changes here from the PBOC. However, we did see the currency being protected in here, the Chinese currency overnight as the stock market got hit on the downside. As I said here, nothing really massive. You got United Airlines actually after the bell today. United Airlines Holdings after the bell today. Maybe keep an eye on that after the bell. Let's take 5 things to start your day in here. So DeSantis stepping out. We've already spoken about that. Not a real big impact. And not massive surprise in here, and has endorsed Trump in here. Hedge funds did well last year. Chinese glues, bad news coming out of China shows nodes are baiting a rout in Chinese stocks again in Hong Kong, intensifying. And to say protection of the currency overnight in here. 2 major Wall Street firms are recommending investors start buying 5-year US notes. And so buying the belly of the curve there, but nothing really impacting what you guys are looking at. Hong Kong stocks at 36% discount shows true depth of China. Deeper Hong Kong setup shows global pessimism about China. Disappointing growth recovery and measure stimulus sour. So the stimulus not coming through from China. China moved to support the yuan as stock markets tumble. That's what I've been mentioning there. But then elsewhere, particularly in the US stocks doing particularly well. Rallying to record levels in here. Say BOJ, ECB, as we said, US GDP this week. Most US earnings beating forecasts, and we've got Tesla and Netflix to report. So we've mentioned all that already. Fed hopes AI fever fuel S&P 500 bull market. Well, I don't think it's really Fed hopes, because we've just been looking at that, right? So I think that signs of slowing inflation, a dovish pivot from Federal Reserve in late 2023. Well, yeah, but we've had actually a backing away from that. We've actually a reversal of that. So it's not so much Fed hopes. Fed hopes been fading, if anything, of late. It's more this kind of AI fever and the fear of missing out. out maybe going on in here at the moment, and the market just taking in their stride. I haven't read this one yet, but Brevin Howard, one of the world's biggest one of my old clients when we were at Credit Suisse, actually. I haven't read this in here yet, but it's a podcast in here by Jason Cummins, the economist, strategist at Brevin Howard. 3 huge macro turning points underway. 3 different eras are coming to an end. I think this is good. If you can get this, if you have access to this, guys, I would certainly and I know this is not day trading, but if you want to broaden your knowledge of the markets, I would certainly recommend listening to this. So I haven't listened to it yet, but I would certainly recommend listening to it if you can get access to that podcast. 5 questions for the ECB going forward, going into this week in here. What will happen this week? And then basically going through. Will the ECB pivot anytime soon? So we're not expecting that to come anytime very soon, but are expecting it by the middle of the year in here. And then just looking at the factors that we're looking at, the Eurozone economy, wages. There's been a lot of talk about concerns about wages, the fact that we have significantly low unemployment in here in the Eurozone, and how far does inflation need to fall before the rate cuts come. So I'm going to share that one as well. Again, this is important, okay, because obviously as the ECB start to look like they're going to pivot, that's going to boost the European stocks, and that's in turn will end up then boosting US stocks. We already covered that. Just to look at the overnights here. So there's the Hang Seng selling off. Is the big outlier in here at the moment. Chinese stock market doing badly, 2.27% down on the overnight. The Nikkei up with the strength that we saw in the US at the end of last week. And then this morning, slightly higher in here on European stocks. The UK FTSE not relatively unchanged, but slightly up. Nearly between 4 and 5 tenths up on the German DAX and the French CAC. And on the overnights, having had a good end to the week. The Dow was up 1%. Nasdaq was at 1.5%. I think it was. S&P over 1%. We're slightly higher again in here this morning with the Nasdaq again charging high, 7 tenths up already in here on the overnights on the futures. So there it is. There's the Nasdaq leading the way higher. This tech boom. The TSMC alongside Apple in here helping us higher Thursday through Friday, and then again this morning. Look at these 3 Marabuzo candlesticks. Boom, boom, boom. Looking super, super strong in here. White soldiers, these are often called, because on the old candlesticks, they used to be white, and it's like black crows are the bearish ones, and the white-shouldered soldiers. So these white shoulders wouldn't be surprised if it's another big elongate. I think this could easily double in here today because nothing to stop it, no data to stand in the way. S&P equally doing not quite as bullish, but we broke out on Friday above the peaks that were set in here at the end of last year, and then higher again, almost gapping higher in here this morning. So for me, the only way is up at the moment. It looks really, really bullish going into the day, and I wouldn't try and stand in front of this, even though we've come a long way in the last 2 sessions in here, Thursday, Friday. Still think there's more upside potential. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe, and I'll be back with you tomorrow with another bull versus bear webinar. Bye.